Welcome back to Candlestick Signals for today's market. We'll dive deep into the candlestick signals that shape the trading landscape on August 20th, 2025. Buckle up, because we're about to uncover some intriguing patterns that could signal major shifts in key sectors. From morning stars to engulfing patterns, today's session was a technical analyst's dream. So, let's get started with our market snapshot and the fascinating candlestick structures that emerged. The S&P 500 closed at 6,399, down 0.20% from the previous session, but remains up 1.47% for the month and an impressive 13.84% year-over-year. The pressure on the market today stemmed from several factors. We saw ongoing technology stock sell-offs, investor reactions to mixed retail earnings, and a cautious sentiment ahead of the Federal Reserve's Jackson Hole Symposium. These elements combined to create a complex trading environment that was reflected in the day's candlestick formations. Speaking of candlestick structures, let's dive into the major formations we observed today, particularly focusing on industry capitalization. The most prominent bullish reversal candlestick pattern identified was the morning star, which made its presence felt in key sectors. In the technology sector, we saw this pattern emerge in stocks like GRMN, which closed at $233.45, and CPAY, ending the day at $320.68. The financial services sector also displayed this bullish signal, with UWMC at $5.60, BPOP at $119.19, and FFBC closing at $25.13. For those unfamiliar with the morning star pattern, let me break it down. This powerful reversal signal consists of three key components. First, we see a long red candle, indicating a downtrend or selling pressure. This is followed by a small-bodied candle, often a doji, which reflects market indecision. Finally, we observe a strong green candle, signaling that a bullish reversal is initiating upward movement. The technical interpretation of these patterns is crucial for understanding market dynamics. The appearance of multiple morning star patterns in both large-cap tech and financials highlights a potential reversal. In the recent downward momentum we've been experiencing, this could be a significant turning point for these sectors. Another key technical indicator to watch is the S&P 500's 20-day moving average. It's currently sitting at 6,380. This level is seen as an important support, possibly indicating consolidation before we see a directional breakout. 8. It's a critical juncture that traders and investors should keep a close eye on in the coming sessions. Now, let's delve deeper into sector and stock highlights. The technology sector, despite being the largest by capitalization, saw aggressive selling today. However, it's not all doom and gloom. Select names like GRMN and CPAY formed those bullish Morningstar signals we discussed earlier, suggesting possible rotational inflows as sentiment stabilizes. This could indicate that while the sector as a whole faced pressure, there are pockets of strength emerging. In the financial services sector, we saw similar resilience. UWMC, BPOP, and FFBC all flashed the same bullish reversal pattern, indicating strength in banking and lending names. This could be a sign that investors are finding value in financial stocks amid the broader market uncertainty. The consumer retail sector presented a mixed bag today. Target dropped 6.3% following its earnings report, but we saw positive movements from Lowe's up 3.3% and TJX gaining 2.7%. These movements suggest investor preference for value and home improvement themes, even as other retail names struggle. Let's talk about sentiment and outlook. The mood in large-cap tech is cautious to negative, primarily due to overvaluation fears and profit-taking. However, we're seeing a more constructive sentiment in select financials and retail names, particularly those showing strong candlestick reversals. This divergence in sentiment across sectors could lead to some interesting market dynamics in the near term. Looking ahead, if these bullish reversal patterns in heavyweight industries confirm on volume, we could see the broader market rebound from its current consolidation. However, it is important to note that persistent weakness in the tech sector or dovish signals from the Federal Reserve could delay this recovery. Traders should remain vigilant and adaptable to these potential scenarios. To summarize today's key movements, let's look at a quick breakdown by index and sector. The S&P 500's 0.20% decline, coupled with the Morningstar patterns in key sectors, suggests it's testing its 20-day moving average and watching for a potential reversal. The Nasdaq Composite's 1.5% drop reflects the ongoing tech sell-off. With no major reversal patterns emerging in the index itself, tech stocks broadly declined, but the Morningstar patterns in GRMN and CPAY show signs of reversal in some leaders. The financial sector presented a mixed picture, but the Morningstar patterns in UWMC, BPOP, and FFBC point to bullish reversal potential. Retail varied significantly, with stock-specific reactions driving movements in names like Target and Lowe's. As we conclude our analysis for August 20th, 2025, it's clear that today's session highlighted the market's fragility, particularly as tech names extended their declines and pressured major indices. However, the emergence of classic bullish Morningstar candlestick patterns in key large-cap technology and financial stocks provides a strong technical case for potential near-term rebounds within those industries. Market watchers will be keenly focused on follow-through buying in upcoming Federal Reserve commentary for short-term direction. The appearance of these bullish reversal patterns, especially in heavyweight sectors, could signal a significant shift in market dynamics if confirmed in the coming sessions. Remember, while candlestick patterns provide valuable insights, they should always be considered alongside other technical and fundamental factors. As we move forward, keep an eye on volume confirmation, sector rotation, and any significant news that could impact market sentiment. That wraps up our candlestick signal analysis for today's market. Stay tuned for our next update, where we continue to uncover the hidden messages in the charts and help you navigate the complex world of financial markets. Till then, happy trading, and may the candlesticks be ever in your favor. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, and subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial investment or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is, and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.